Decoding the order book to determine whether Bitcoin's bounce is sustainable. Hey guys, it's Keith Allen. Hope everybody had a great weekend. I didn't get out to go fish this weekend, but did go play some pickleball with the wife and some friends. Had a dinner party with some friends. Nice to back away from screens for a bit, even though I did have a lot of work to do. I didn't get to it, and so now I'm going to pay the price for that. But sometimes it's important to have that quality time. Actually, it's always important to have that quality time. Anyways, so what's going on? Hope you had a good weekend, and we've obviously seen some changes here in Bitcoin price action, and specifically in the order book. So in today's analysis, we're gonna look at the order book and FireCharts and analyze that and show you exactly what has changed, and we'll look at the history of similar changes to explain, or at least try to illustrate, why we're seeing this change in price action and whether this is likely to lead to a fake out or if this is indeed a sustainable rally. Before we climb in, as always, do me a favor. If you like the stream, smash all the buttons, hit them all. Don't waste any time. Just do it. Just do it right now. I'll give you a second. Hit the like button, hit the share button, bring some friends into the fold here. Bring your friends and colleagues in and help us grow the channel. And of course, share, comment with me. I love it when you guys comment on the streams, either recorded if you want to do it while we're live. The comments are open on YouTube, and otherwise, if you leave a comment on the X platform, I will of course always respond to those as well. And subscribe. Make sure you subscribe. There's a little bell up there in the corner. Hit that bell so that you subscribe and you never miss any of these lives. I'm doing them pretty much every day, but at different times during the day, just depending on what I've got going on in the morning. I try and get them out as soon as I can. So without further ado, let's go ahead and climb in, and let's start by showing you what is happening in the order book on FireCharts. Seems to be a favorite for people, so let's go there. And as you can see, price recovering off of last Friday's little dip that we had, and now we see things sliding back up a bit. So to really get perspective on what's happening, we need to zoom out. And so let's go to some higher time frames, and you can see here pretty closely how we had for a brief period over the weekend where we had this deep concentration of bid liquidity here at this 50K level. And, we had this nice ladder going all the way down. And for that moment, brief as it was, we saw something that we haven't seen in quite some time. And that is where bid side liquidity was exceeding the ask side. And I speak really of this area up here, and I'm going to go out. Let's go out a little further. Because as we've talked about this a bunch in the past. Let me refresh this. We've talked about this a bunch in the past, where liquidity tends to, people think that liquidity just automatically attracts price, and it does attract price to a point until it doesn't attract price. And so I don't know why my internet is lagging so long waiting for this to reload and refresh, but here we go. All right. So until that happens, let's just go to some longer term stuff here. Right. And I can take it to the 3 year, and we'll do that in a second, but I think this illustrates it pretty well here. So you can see here, and we've talked about this a bunch over the years, how price tends to bounce off of the highest concentrations of liquidity in the order book, and that works in both directions, right? You see a big block of bids down here, 106 million, with another 102 on top of that. That's over 208 million just right there, and those two concentrated levels with a ladder going down. And this obviously really helped kick things off here as price broke out of that. This was breaking that 35K range. And, repeatedly, same thing in the opposite direction, right? This pushed price down. We got a little, bids here. We got back up, knocked it back down again. Here's another good example that looks similar to what we see over here, where it didn't necessarily get bright yellow. And of course, here's your volume profile here on the left-hand side. but it was much more concentrated than what we had to the upside, and this is why price did what it did. Um, then we got into these highs up here, and made these new all time highs. Things got pretty heavy here up above, and price reacted to that. We get these concentrations again. Here's another one. This isn't even as big as what we have right now, and you saw what this did. And so I've been saying all along, until the bid side gets more concentrated volume than the ask side, then it's going to be very difficult for us to penetrate this. We finally got to a point, and yes, some of it has faded, and that may or may not be a concern, and I'm going to show you why here in a second, right? So I don't love the fact that we saw this. Let's go to the monthly. We saw this come in, and then it disappeared so quickly, right? But and here's the but. Let's zoom out to the 3-year chart and show you some history of moves. Very well, moves. I'll say the dynamic in the order book changing similarly, um, and what happens, right? And you can see it here in the most recent events, right? We bounced and it went away. We we bounced and it went away. Same thing here. Boom, gone. So the reason for that is twofold. One, that bid liquidity might be moving in other places. It might get converted into market orders, or it might simply get pulled because it did its purpose. It served its purpose, right? It was a how should I say, choreographed move, and price did what it was supposed to do or what was intended, and the rest is history. So where could this liquidity have gone? Good question. If we zoom in to tighter time frames, we could see that, well, this ended yesterday, but over the weekend we did see what appears to be a decent amount of, how should I say, potential TWAP influence on this yellow class, the smallest order class. Not a ton of volume there, but at the moment this was pulled, and you can see where this kind of started to erode. Let's see if I can see it better on the monthly. I'm trying to show you when this occurred, right? When it got pulled, which was essentially on so like midnight, like on the new candle on Saturday night, Sunday night. Um, when this got pulled, this trajectory began, and retail lives in this in these smaller classes, no question about it. But whales also can use these smaller classes, and it looks to me like, just because this is at such a kind of steady incline, that this may have been a TWAP bot in this order class as well. They did about 10 million bucks over that period of time, so potentially some of it went into the TWAP bot. Potentially, some of it also went into Purple, which had initially bought at that moment, but it wasn't nearly the volume that was pulled. Right? It wasn't all of this volume. Did not translate into TWAP bot or even market orders on Purple. Some of it did. Some of it may have moved up, but some of it also likely was pulled. So now we've got some, as you can see, we've got some levels that we need to clear to really turn this into something special. And namely, obviously we're hovering here around 50, 55 and change, trying to clear this 56 level. But obviously there's some heavier concentrations of ask liquidity at 60K. There's more at 65K. And then, this is where we really want to be, is up here into this, right? And that means we got to break that 69 to get above that 70K level. And these areas are not just random. So let's head over to the candle chart and see what exactly this looks like. Okay. So as you can see, we have this bounce at the 50-week moving average. And look, here's a test of support. This was our lower low, our wick down to 49 and change. And then we had a wick through this here. And wicks really don't, it's the candle body that really counts for me. Okay, so we're now recovering here. That 50-week moving average is somewhere around 53, almost 54K, just shy of 54K. And the 21-week moving average is above 55K. So what did I just show you? Excuse me. It's at 62K. So looking at that again on FireCharts, we can see that we have some protection here, floating above 60K. And then, of course, what's up here? Well, we have some mid-cycle top up here at 65. And we obviously know that we have had so much history getting rejected from that 69K level, the prior 2021 top. At some point, when does that come into play? Right? We've got to take these level by level. So we have to first. Now that we're here on the daily time frame, you can also see 60K, 60K let's see where it actually lays at the moment. These moving averages, of course, they change constantly. That's why they're called moving averages. Currently, that 21-day moving average is at the 59K level, and the 50-day moving average is at 60,600 or so. And so again, we have some liquidity that correlates with that, right? Laddered from 59 up to 60 and change. So this is really some key technical resistance that price would have to move past to then go after this, and then ultimately, work our way into this range up here. So in terms of the legitimacy of this move, I got to tell you, I kind of like it. Now, that does not mean that we are on a one-way ticket to all-time highs. It doesn't mean that at all. In fact, I would be surprised if we get there from here in one full swoop. Okay, I think this is going to take time. I think that we're still consolidating in this range. I do expect that there are some things that are going to influence that, and namely, I think that the market is right now so hypersensitive to the economic data because of concern, because we have rate cuts pending here later in the month, and because what happens after that is unknown, right? And so lots of talk about how price reacts to rate cuts. And historically, there are many, many times that price has fallen after rate cuts. But there's also times where price may pull back a little bit and stabilize and then recover to the next leg up. And so that really depends. It seems to historically depend on what the economic outlook is after those rate cuts. Now, we know that there's a series of rate cuts coming. FOMC meetings is on the 17th and 18th of this month. So we'll get that announcement on the 18th. Is it going to be a quarter point? Is it going to be a half a point? And we also know that there's going to be a series of rate cuts that continue into 2025. And so, one camp says it doesn't really matter whether it's a quarter point or it's a half a point on this first cut, because they're still telling us that we are, on pace for 1%, between now and the end of the year. Well, I think that it does make a difference, because if you're cutting more aggressively right out of the gates, then perhaps the market perception is that there's more concern to try and catch up with things, more concern of a hard landing, more concern of a deep recession after that. And that concern is there. It's exactly why we dipped here last week. So those are the things that we're waiting for. What the economic outlook is post cuts and post November election. There's just a lot going on between now and the end of the year to determine whether, how price is going to truly react. So those are the things that I'm watching at the moment. As you can see, whales are buying, purple whales are buying again, but it's not going to be a straight line, right? And the fact that there's not a ton down here below supporting this up, what I would like to see is more of these bids from down below starting to stack up higher and higher, and that hasn't happened yet. So those are things that we're going to watch. In terms of validating or invalidating this move. I'm watching very closely. Obviously, the key moving averages. I do want to see things break above this 59K, above 60K ultimately, to have more confidence in where we go from here. But I do think that until we get through, probably until we at least get through the rate cut announcement on the 18th, that we're likely to see price ranging in this range between the 50-week and the 21-week moving averages. And that's not the worst thing. A lot of consolidation in this area so far already, and this could lend itself to a stronger move up. Now, one other thing that I like about this is, if you recall, last week I was looking for a double bottom test, from this 50K level. We didn't get 50K, obviously, right? That didn't happen. But I want to show you something, and this is why it's also important to change your perspective from time to time and switch your charts, get a different look from time to time. If we switch this to a line chart, what do we have? Well, we have a pretty good double bottom scenario here. So I do like the fact, and this illustrates it here perfectly, right? So technically, this is double bottom. And so that to me is positive. We also have, at least on the daily time frame, we have new trend precognition signals happening. This is, of course, a 24-hour signal. We had one, this was on Saturday. We have another one down here on the A1 algo, which is another trend precognition indicator that came in last night. So that's for this candle right here. And so this is good for the outlook, at least in the short term. On the weekly, no new signals per se. And I would say that at least the A1 slope line is showing a reversion in the trajectory, reversion in the momentum, meaning this orange line here was bearish momentum, and that has reverted on this new weekly candle open. No signal out of that yet, just means that maybe we're seeing a change here. And then another thing that I, of course, look at regularly, and I've shared with you guys regularly, is the RSI on the weekly time frame, which, as you can see down here, I have my little green line, and we have again avoided the disaster. If we cross below this line, that really, to me, historically has shown that we are in a downtrend, and when we're above this line, the uptrend remains intact. And as you can see, the uptrend is still intact. So that's what I'm looking at. I hope that gives you some insight and gives you some things to consider as you navigate through the week. And if you like this stuff, again, please do me a favor, smash all the buttons. Make sure you especially hit the subscribe button and leave a comment. Love to hear from you. Hope you guys have a fantastic week. It's going to be a busy one for me, but I'm excited about what's ahead, and I will, of course, keep in tune to what's going on. If I see anything developing through the day, I'll do my best to keep you guys informed. Have a great day, and as always, trade safe, my friends. Oh, we got one. Yeah, Anthony Reese popping in, saying he's watching the RSI as well. Yep, something we got to consider. And Toasty saying lots of bear sentiment lately. Is it possible the bear cycle has started? Anything is possible, man. This is crypto, right? It's the Wild West. But as I maintain, what do you want to call it? Yes, you could say it started, but it hasn't been confirmed. And I would say that the bull cycle has not invalidated to be over yet, right? So I guess perspective is everything. I personally think that we are still intact and that we will have a prolonged consolidation. But I also believe that 73,800 is not the all-time high for Bitcoin. I do think that things will change before we get to the end of the cycle. We'll see. Anthony says, getting too close to the second pumps of 2021. It very well could be similar to what we had in 2021, where we had a mid-cycle top, and a significant distribution and sell off, and then had a distribution rally that took us to a 21 new all-time high. We could absolutely see that. Certainly not out of the question. But what I've been watching the most is whether we stay in the trend, and of course, the key moving averages that I'm always focused on. Um, I like that we have support here at the 50-week moving average. So we'll see how things continue to develop. Alexander says he's waiting with dry powder. Good idea. I'm waiting with dry powder as well, and really wrestled with whether or not I wanted to buy this dip over the weekend, and I didn't get the bottom of it, but I did pick up a little bit yesterday. Um, didn't have a lot of time to spend with charts, but when I saw things, kind of the momentum of that ladder, and looked at the line chart that showed the double bottom, I did pick up a little bit, add a little bit to my position. So we'll see how that translates. How about those billions sitting around 70K? Well, we talked about that at the beginning of the analysis, Anthony, and I'm looking at one exchange here on Binance, which is not showing me billions at 70K. It's showing me, and I'll zoom out to a higher time frame where it's a little bit more concentrated, and we'll have a bigger bin. Hang on one second. The whole point of this analysis here is to illustrate that what we had up here has diminished, right? It was at 80 million. It's now down to 69 million, just shy of 70 million. And over the weekend, we got into that range as well. But what we have here now is liquidity stacked all around it. That brings that to, there's 60 million. There's another 52 on top of that. So that's 112, 113 million, and another 40 million on top of that. So what we have collectively here in depth is looking good. Now you've got a good 200, probably 250 million up in this range as well. But briefly over the weekend, we did see a point where this was outclassing what was up here, and so this just have to see how it plays out. Would it make sense that market maker would go after that at some point? Despite what you may believe, most market makers aren't chasing, they're not hunting your stops, and they're not liquidation hunters. There's leverage in both directions. And, that leverage is estimated. And, for the most part, it's currently heavier in our near range, but it's estimated to be larger levels of leverage here, heading to the upside. So let's see. It's at the moment, and this is an estimate off of Kingfisher. It's up to, let's see if we go to just a 50K, right? Down to that 50K range, there's about 27, 25, 20, 26 million in longs primed to be liquidated. And if we go up to, well, where's all-time highs? At 73.8, right? So if we go up to that level, we're at 47 million. So yes, there's more to the upside. These things take time, right? Anthony has one more, referring to all the heat maps posted everywhere on X, taking that with a grain of salt. Hey, glad to have you with me, Anthony. I appreciate you following along. Everybody's got a little different perspective on it. I'm trying to show you guys some history that illustrates that we've seen this before, and price is doing exactly what it tends to do. We just have to wait and see if this is going to continue to develop, if we're going to have more rungs of these ladders move up and help push price up. past this difficult 59 to 61, 60 and a half range, so we can then get up here, go after 65, and then if we clear 65, we can talk about going back after those all-time highs. But one level at a time here, guys. We do have some economic data, of course, coming this week that I think the market is going to be sensitive to, especially Wednesday's core inflation CPI numbers. Those are going to be important. PPI on Thursday, and you know, and then the following week we have our Fed announcement coming out on the 18th. So this, we'll have economic projections then, and of course the Fed press conference on Wednesday the 18th. That's next week. So a lot can happen between now and then. The Fed is looking at this data to make their decisions, and the market is going to try to anticipate and interpret what that means between now and then. I'll leave you with one parting shot here of FireCharts. You can see a little bit of support here. Certainly not a lot, but trying to hold price up and keep things moving in the upward direction with a little bit of sell pressure coming into it as well. So I'll keep an eye on things throughout the day, guys. Again, if I see anything new developing significant, I will do my best to keep you guys updated. Have a great day, guys. And as always, for the second time, trade safe, my friends.